Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me remotely, we have Steve O, Head of ETF Listings and Product at Nasdaq, as well as Ben Haskell, Director of ETP and Options Listing Regulations at Nasdaq, to discuss the SEC approval of the new Nasdaq ETF listings rules. It's great to have you both with us. Thanks for joining us on Trade Talks. And Steve, I'm going to kick it off with you. There's been some big regulatory news coming from ETFs at NASDAQ concerning the much discussed ETF rule that we have heard touted as a new era for exchange traded funds. Can you please share some more detail on that?
Sure, Jill. Thanks for the opportunity to discuss this. So I am proud to announce that last week, NASDAQ received approval for new ETF listings rules on NASDAQ listed ETFs that are covered by the ETF rule, also known as 6C11. As you can see in the visual, the US ETF industry has grown rapidly in recent years, both in number of products and total AUM. I'd like to thank the Trading and Markets Division of the SEC, the ETF regulatory team in NASDAQ's Office of General Counsel, and the greater ETF ecosystem for all their efforts to usher in a new era of growth for the ETF industry.
And then if you can comment on aligning the SEC rule with our new listings rule.
Sure, yeah, thanks for having us, Jill. So our proposal to incorporate the conditions of Rule 6C11 into NASDAQ's listing rule was approved on April 3rd, and NASDAQ was the first exchange to receive approval. Eligible ETFs will need to be compliant and be listed under our new Rule 5704 by December 22nd of this year, as this is when the transition period for Rule 6C11 ends. The new rules are a significant development for the industry and for NASDAQ, as for over 90% of our listed ETFs will need to become compliant by December 22nd.
All right, Steve, and Ben, I'll ask you to follow up following Steve. What are some of the main highlights from our new ETF listings rules?
Sure. Coming from the ETF issuer's perspective, they'll see many benefits, but some of the highlights include greater efficiencies in launching new ETFs, saving them time and money. The second being custom creation redemption baskets for all ETF issuers, with fixed income ETFs being the biggest beneficiaries. As you can see in the chart associated, that this ETF class has quickly grown to account for over $1 trillion in total ETF AUM. Custom baskets will allow fixed income ETF portfolio managers to more easily take in and deliver bonds to target better on-screen liquidity, performance, and tax efficiency. Thirdly, elimination of the IOPV dissemination requirements originally intended for trading arbitrage, which will thus lower overall operational costs.
So the primary mission of NASDAQ's regulatory team is to protect investors, and we feel that the new rules focus on increased disclosures provides these protections in a couple of key ways. So first, more information is available on a fund's website and in SEC filings to help investors get the information they need to make informed decisions. Second, this increased transparency further deters potential manipulation. And finally, market makers will be able to get what they need to effectively value the fund's portfolio.
And then what does the ETF rule coupled with NASDAQ's new ETF listings rule mean regarding greater efficiencies for new ETFs to come to market?
So from a listings perspective, our new rules and Rule 6C11 will make the NASDAQ listing process even easier while retaining important investor protections. The listing process will change slightly in terms of what firms will need to submit in support of a listing application. However, the process for evidencing compliance with the conditions of Rule 6C11 will result in firms needing to provide less data because much of it will be publicly available and easily accessible.
And then what the ETF rule becomes a requirement for all ETF issuers by December 22nd, 2020. What does this mean between now and then? And Steve, I'll ask you to follow up.
Sure. So we feel we have designed a process which will be easy for the issuers and will also provide us with the information we need to confirm compliance. So once a listed ETF is ready to comply with the conditions of Rule 6C11 and list under 5704, they simply submit a certification to NASDAQ. Per SEC instructions, following an ETF's listing under 5704, NASDAQ will notify the SEC of the move. The SEC has then told us that following such notification, they will look to rescind the ETF's exemptive relief order.
And on the back of that as well, so the entire NASDAQ ETF team will be working closely with all ETF issuers to help them understand the changing landscape of the new ETF listings requirements as they work toward transitioning to compliance before the end of this year.
And Ben, any last comments?
Yeah, first, thanks again for having us on to discuss the new rules. I believe that Rule 5704 and Rule 6C11 are ultimately good for investors, issuers, and the entire ETF marketplace. They maintain strong investor protections through increased transparency for investors and provide ETFs a more efficient path to market. Nasdaq will continue to work with the SEC to ensure that our rules protect investors, but also support ETF formation and trading. To that end, Nasdaq has filed a rule proposal this week to remove the 50 shareholder requirement and replace it with effective requirements more akin to the ETF structure. Changes like this make sure that our listing rules are properly positioned to regulate listings within the ETF ecosystem. And one final note, we are ready and available to answer any questions and help issuers with their transition to the new rules.
All right, and Steve, I'll give you final thoughts.
Sure. I would like to finally thank and commend my colleagues here, Ben, along with Jonathan Kane and Vanita Kong from our ETF regulatory team, for all their great efforts over the last 2 years. They're a very important part of the NASDAQ ETF team that helps make NASDAQ the first place to go for ETF listings, ETF trading, and ETF options.
All right. Thank you both for joining us on Trade Talks. And thank you for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.